Good morning. I am Deepa from Department of Business Administration PG. We are already two sessions we discussed about the nature and scope, what are the objectives under the financial management. Next, we are going to see about the liquidity working capital decision. So, under the decision related to the working capital is another critical scope of financial management. Decision involving around working capital and short-term financing are known as a working capital decision. So, it involves both the long capital and short-term financing. It also manages the relationship between the short-term asset and liabilities. So, under the short-term asset include a cash in hand, receivables, inventory, short-term securities, etc. Under creditors, bills payable, outstanding expenses, bank overdraft, etc. or a firm short-term liabilities. Short-term asset can be exchanged with cash within one calendar year. Similarly, the liabilities are to be settled according to the accounting year. Next one, we are seeing about the emerging role of the financial manager in India. The key challenge for financial manager appear to be in the following areas. First one, investing planning and resources allocation, financial structure, merging acquisition and restructuring, working capital management, performance management, risk management, corporate governance. Next, emerging role of financial manager in India. Under the job of the financial manager in India has become more important, complex and demanding due to the following factors. First one, liberalization, globalization, technology development, volatile financial prices, economic uncertainty, tax law changes, ethical concerns over financial dealings, shareholders activism. Next, finance function. Under the finance, you have the important function. It refers to the practice and activities directors to manage the business finance. The finance are oriented towards acquiring and managing financial resources to generate the profit. The financial resource and the information optimized by this function contribute to the productivity of the other business functions, planning and decision-making activities. Under this finance function, it comes under the four. One is a liquidity decision, investment decision, dividend decision, finance decision. So under the liquidity, you have so many types. Investments, you have to invest according to the shareholders and you have to take the decision according to the dividend and the financial decision. Next, we see what are the scopes under the financial management. First, determine the financial needs, selecting source of finance, financial analysis and interpretation, cost volume profit analysis, capital budgeting, working capital management, profit planning and control, dividend policies. Next, what are the problems arise under the agency? So, agency is acting between the owner and the customer. He is the middleman, is the agent person to get an amount, that is an incentive, like that's both the managers or producers and the customers. So agency problem is a conflict of interest inherent in any relationship where one party is expected to act in the best interest of another. So agency problem is a livelihood that managers may place personal goals ahead of corporate goals. In corporate finance, the agency problem usually refers to the conflict of interest between a company management and the company's stockholders. So they have to act about the company's management and also the company's stockholders. So they want to improve the shares and make the profit to the organization. They have to play important role. These are the problems arise from the agency. Next, under this, breaking down agency problem. How we have to break down under the agency problem? The agency problem does not exist without relationship between the principal and the agent. So they have the need, without the relationship, they should not be done that problem. They should not face the problem. In this situation, the agent perform as task on the view of the principal. Agents are commonly engaged by principals due to the different skill levels. different employment position, or restriction on time and access. For example, a principal will hire a plumber, the agent, to fix the plumbing issues. So although the plumber best interest to collect as much income as he can, he is giving a responsibility to perform in whatever situation result in the most benefit to the principal. Thank you.